Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 2nd, 2024. And I wanted to make a video about the upcoming US election. No, it's not what you think. I'm not all of a sudden going to talk about my political views. I'm going to keep it crypto, Bitcoin price action, altcoin price action, indicator price action related. And as we all know, major socioeconomic sort of global events affect the dollar. They affect how the dollar is valued, and the relative value of the US dollar affects all risk on assets, all markets, from the crypto markets to the traditional financial markets. So I wanted to talk about what I believe we're very, very likely to see given this coming election. Okay? And I want to dispel a few things that I think are foolish that a lot of people are saying. I'm hearing that candidate A is bad for crypto, candidate B is great for crypto, ergo, if candidate A wins, then this will happen. If candidate B wins, then that will happen. Foolishness. Foolishness. Either way, whichever candidate wins, we're going to see volatility. And whichever candidate wins, we're going to ultimately see markets rise and fall as they always have. Okay? There's no candidate that's going to tank all the markets. At least on an election night or in and around that event. Okay? So I just want to say that the markets don't give a damn so much who wins, but the event itself is going to cause some volatility. So I really wanted to say that from the outset. Next, in this video, I'm going to tell you exactly the type of volatility. I'm just not going to tell you we're going to see volatility. I'm going to tell you exactly what I believe is likely to happen based off of my understanding of markets, Wyckoff accumulation schematics, Ralph Nelson Elliott's A/B basing theory that I love and I talk about all the time on this channel. I'm also going to tell you why this is a major move upcoming. If you followed my work, you followed my videos, you know it's a major move. We can see it in the US dollar currency index. We can see it in Bitcoin dominance. So I'm going to talk about all of that in this video. Guys, let's get started with Bitcoin, as always. And you can see here, I haven't hidden anything. I haven't kept anything a surprise. Okay? This is what I think is going to happen, outlined in white. Is that exactly what I think is going to happen? I don't know. But something like that. Okay? And I'm going to hopefully explain why you can expect this type of price action. All right, for so many reasons. Firstly, I did correctly predict that if Bitcoin did indeed come back to this level, this key level, which I said in the last video or the video before last was super important to retest, it would likely consolidate at this level for some time and retest it and retest it and retest it because it's such an important level. But after doing all of that work, we can expect all-time highs. We can expect, breakneck, really pumpy price action, the kind of price action we haven't seen in a very long time. Okay? And for those of you who haven't seen my previous video, this level is simply the top of our previous consolidation that took about 12 days here. And it's the midline. This is more important. It's the midline of a multi-year channel that Bitcoin's been in since, I think, the end of 2022 I think the end of 2022, beginning of 2023, something like that. Don't hold me to it, but I'm not going to check right now because that's not exactly what I want to talk about. I want to stay focused. I don't want this video to be too long. In any case, I did correctly state that we were going to come back to this level. We did come back to this level. And then I said it was very likely that if we came to this level, we weren't going to immediately run up, but that we would stay and consolidate. This is what we're doing. Now I'm going to tell you exactly what I think the consolidation is going to look like. And to do that, I'm going to employ my understanding of Wyckoff analysis, specifically Wyckoff accumulation schematic. Okay, very quickly, for those of you who have no idea who I'm talking about, what I'm talking about, there's a guy called Wyckoff, and he was turn of the 20th century financial analyst extraordinaire. And he said this: markets move up or down, okay, but before they do either, they go through a period of consolidation, right? When they go from down to up, they go through something we call accumulation. And this is what this accumulation looks like. It can look like this or like that. I mean, there are varying types of accumulation, but generally speaking, they're going to look like this. And I'm going to show you that in a second. And when they move from up to down, they look like this. They also consolidate. I call that up to down consolidation a distribution. I call the down to up accumulation, or down to up consolidation, and accumulation. Okay, so he specifically told you what the pattern of the price would look like when it did its intermediate consolidation. So that's what I'm going to play off of, in addition to my understanding of Ralph Nelson Elliott's 2 degrees of A/B basing and a pivot. Okay, let's now not waste time and go straight to this schematic. Okay, so Richard D. Wyckoff. Okay, again, the 20th century was great for financial analysts because, I mean, these guys were amazing. Look at this. You have here a schematic of what an accumulation typically looks like. And so he said there are all these different aspects, you know, and they're labeled with these, you know, secondary test and automatic reaction, spring, the secondary test in phase B, last point of supply, the SOS, which is the what's the SOS stand for again? Something of supply. But anyway, he's big on supply and demand, and you can look these up. But essentially, the thing I'm most interested in is how he has the price go from up to down to up to down to up in this range. Pay attention to that. So you have a range, okay, a range of price where the price is consolidating. Here it's accumulating, meaning you're gathering orders, you're gathering supply to mark up. The markup only happens when the demand exceeds the supply. Okay? There's too many people wanting Bitcoin, too many people wanting Ethereum, too many people wanting Cardano, and there's not enough, then the relative price goes up. Okay? That's the idea of Wyckoff analysis, and he has, you know, brilliantly outlined what this would look like. So just keep this in mind. So we have the price going up and down and up and down and up and down and back up. Okay, so you have one up, you have up, down, up, down, up, down, right? That's the idea. Now look at what Bitcoin's doing. Keep that in mind, okay? I'm not going to split screen anything. I'm going to ask you to use your mind and focus. Look at what Bitcoin's doing. This is, again, a range. Just like I said, we're likely to enter a range of consolidation. In this range, is likely to go up and down and up and down. Up. Don't be surprised if we hit the top of the range again. Once again, they can look a lot of different ways, but every single consolidation, accumulative consolidation or accumulation, has multiple tests of the support, multiple tests of the resistance, and usually in a large move, okay, and this is a large move, we have what we call a spring. So this is really the point I want to make. People are going to say, oh, see, X candidate won. I told you it was going to be negative. Look, the price of Bitcoin, the price of Tesla stock, the price of this went down. No, that's what you typically do before a big move up. That's called a spring. You don't always have a spring. Let's go back to the schematic in Wyckoff's accumulation. This is one potential outcome that Richard D. Wyckoff saw. The other accumulation schematic he had in his theory didn't have a spring. But I, in my experience, typically see a spring. And a spring is what? A spring is when the price goes down below what most people thought was the support of the asset. And it's called a bear trap, meaning people think it's going to drop and fall lower, but actually it's trapping people who think it's going to go down, takes their money, and then the people who thought, oh man, I guess it wasn't going to go down this way because they were bullish, it takes their money because it hits their stops. It takes both people's money. That the market typically does that before a big move because it needs liquidity. Markets are like water, like electricity. They're looking for the most liquidity. That's, capital. And how do you get the most liquidity? By trapping shorts and longs. So be very careful about that. Okay? And this is just looking at Bitcoin, but be very careful about that in all the assets. Be mindful of this spring below what you thought was the level of support. Okay, and I'm going to show you in a bit how you can measure this based off of what Ralph Nelson Elliott taught us in his A/B basing theory. Okay, so this is the midline. This is the midline, multi-year support that we just broke here, and we came back to retest. Don't be surprised if we wick below this as a spring before we go up for all-time high. Okay, so Richard D. Wyckoff taught us that we were likely to see the price do something like this. Okay, that's what we got from him. Now, let's get even more particular by looking at what Ralph Nelson Elliott says in his 2 degrees of A/B basing. 2 degrees of, or his A/B basing theory. He called it his A/B basing theory. I called it 2 degrees of A/B basing in a pivot because that's what I observed in the market. Okay, I'm counting like this. This is my first degree of A/B basing. My second degree of A/B basing. My third degree, I think we're going to come all the way up here. So I would not be surprised if Bitcoin probably tomorrow at the open of markets, right? Because you need quite a bit of liquidity to get up here. So tomorrow, around 5 to 8 p.m., we make a move all the way back up to 71.4, okay? And then, from that point, we slowly start to bleed, and I would not be surprised if by Monday or Tuesday, the election day in the US, where, a lot of people think, oh, this is going to decide the fate of this or that, right? A lot of times markets react to big events because the dollar reacts to big events. That, I would not be surprised if it created a big move up. So again, I think Bitcoin goes in this way. Firstly, this is our channel. We've gone up. But we have to retest the top of the channel again, I believe. Because any regular run-of-the-mill consolidation channel does that. It retests the bottom and the top of the channel, right? From there, again, slow bleed until Monday or Tuesday, at which point we go up. Now, how do we measure this? How can you, as an investor, be cautious not to get caught here? If you're long, let's say you think, okay, Dean, I agree with you. I think the price is going to go up. I think we're going to go all-time highs. Maybe Monday, maybe Tuesday. Where do I set my stops? How do I know? Okay, Ralph Nelson Elliott tells us this. If this is 1 degree of AB basing, this is the 2 degrees of AB basing, any pivot, any AB base happens in any AB base happens in 2 phases, right? There's an up and a down. There's a yin and a yang. This move right here is going to tell you how far down this move can legally come. Okay? If this theory is proper, if this theory is correct, if it's indeed what we're looking at, and we're not looking at a continued impulse, and this is indeed some sort of accumulation, some sort of a consolidation, this move is going to tell you how far down this move can come. And this is how you measure it. However far this move comes, you take your Fibonacci retracement tool. I'm talking a lot to my leverage traders, right? With stop losses. My people who have bought on spot probably don't care. You take your Fibonacci retracement tool from the bottom of this move all the way to the top. Let's say we come back to 71.6, the top of this channel, right? That means the absolute bottom that this move can come, because this would be an A wave, this would be a B wave. This B wave can go maximally to 67,405 and still be a B wave. Anything below 67,405 and it's no longer a B wave, and this entire thing, this entire theory, this entire idea is invalid. Okay? But to keep it valid, then in that example, let's say this A wave went up to a maximum of 71.6 or whatever I have it here measured, then that would be the way to measure the maximum retracement of the B wave. And that would be a dip, not a break, but a dip of this channel, right? Obviously, to maintain the integrity of the channel, you can only dip, but you can't break. And a proper dip respects the phi ratio, the 1,618, the inverse 1,618 of whatever this move is. So that is specifically and precisely how one can trade this and stay safe. But again, you have to wait until this move shows itself. Without that, you don't know the full extent of this move. Do you see what I mean? That's why in any sort of case where you have these consolidations, try to count them out. It's difficult, but if you're able to successfully do it, you're able to at least keep safe and wait for that move, because that is likely going to happen, because this is likely going to take everybody's money, because open interest, I'm probably not the only one saying, oh, we're likely going to get a pump on Monday and Tuesday. Everybody probably thinks that. Most people probably think that. Anybody looking at the high time frames on Bitcoin, anybody looking at the US dollar currency index that we're going to look at in a moment, anybody looking at Bitcoin dominance thinks, oh, we're probably going to get something. The trick is, if you're going to do this on leverage, how do you keep from getting stopped out or liquidated? This is how you do it. Okay? So you wait until this goes. Most people can't wait because they're so excited. And I get it. It's been so long that we've gotten a proper move in the cryptocurrency markets. But this is how you do it. You wait. You're probably not going to get this move until late Sunday, early Monday. Wait for it to start retracing, then measure this. Thank me later. Okay? Thank me later. All right? So that is what I see Bitcoin doing. That's why I see it doing what it's doing. It's inconsequential who wins, but the fact that you have two candidates, the market doesn't like the market likes predictability. The market doesn't like what's the word I'm looking for? The market doesn't like things that are not sure. Market likes things that are predictable, nice and regular, right? But life is irregular, unpredictable. But there's only two candidates, and it's kind of already baked in. So in my estimation, you're going to get this either way. And we may get a winner announced on election night or not. That's happened before in the past. Either way, you're going to get something like this. People are going to go back and retroactively explain it based off of who won and how they won and all that stuff. You're likely to see this, mark my words. Very high probability read on what the markets are showing. And it's not just Bitcoin showing this. I'm going to show you a few altcoins in a moment. Okay. No timestamps on this one because it's all about one thing. This channel. Okay? Nicolas, arrête s'il te plaît. He is so freaking loud. All right. I'm going to show you why the Bitcoin, let's go to Bitcoin dominance a second. Let's look at the DXY, the US dollar currency index. And we saw this last video. I talked about the US dollar currency index. The US dollar currency index is very clearly in the opposite of what Bitcoin is in. It's in a distributive range, all right? It's the same thing that Richard D. Wyckoff talked about, but opposite, okay? It's a distribution where you go up and then you test the top, come down, test the middle, right? Because you always need to test the middle. And it's currently testing the middle. I talked about this last time. And after it consolidates, it's dumping. It's over. And that goes into a new equal but opposite trajectory, equal but opposite impulse, right? It went up in distribution, now it goes down. That down is Bitcoin going to all-time high, Ethereum going to all-time high, crypto shitcoins, 10xing. That's where you get that. That liquidity comes straight from the US dollar, okay? And what you're likely to see on election, in and around the election, it may happen on election night, it may happen a little before, it may happen a little after, is the dollar showing you the big event through volatility, right? That consolidation and the break happens in and around the election. That is what the election shows you. It doesn't tell you exactly what's going to happen, when it's going to happen, the minute it's going to happen, but it's an event. That is the event. The event is the pivot of the price up and out of this channel that it's been in for about 10 days, okay? So that's what I'm seeing on the US dollar currency index. It is very much mirroring what we're seeing in Bitcoin's actual price action. Now, for those of you who are interested in altcoins, who wouldn't be? Why wouldn't you be? Look at Bitcoin dominance. I talked about this in 2 videos ago. It's running out of steam finally. This ending diagonal, super bullish, boom, 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 boom. Finally running out of steam. It was making higher highs and higher highs and higher highs. It's finally kind of trying to make a higher high and failing. It's going to break. That's basically telling us that altcoins are going to start running and they're going to start outperforming Bitcoin for the first time in years. Consistently, okay? For the first time in years. You can see this very clearly on the high time frames. You go on the weekly time frame, what do you see? Okay, on the weekly time frame, you can see in the stochastic RSI indicator, you can see strong bearish divergence. Okay, you make a higher high here, right? Clearly higher high here in the chart. You may not even have made a higher high. It's a lower high, if not an equal high. This is strong bearish divergence. It's yet to be confirmed on the weekly time frame. On the daily time frame, you're absolutely in overbought territory. All right, I know it's an indicator, but we're using this stochastic RSI indicator, so I have to use that verbiage. In any case, you can see that Bitcoin dominance says it's almost time. You can see that the DXY, as we just saw, says it's almost time. You look at the indicators, the weekly, on the US dollar currency index for the stochastic RSI, it's about to cross bearish for the first time in weeks. Okay, it's about to cross bearish for the first time in weeks, right? Since June. It's the first time since June that you're about to get a bearish cross on the weekly on the US dollar currency index. Okay, if you go on the 4-hourly, I believe you also see that it's in this overbought territory, so you're likely to come down. Okay, so I talked about Bitcoin. Let's look at the total three. I talked about the total three in 2 videos ago when I was talking about altcoins, and I said, hey, look, this is probably gonna find some support here, but it didn't. Okay, so if it had found support here, it'd be a zigzag, right? 5 waves up, 3 waves down. If it doesn't, what are we looking for? What are we looking at? We're looking clearly at what we call a flat correction, right? Which is a 786 retrace. And look where the price of this total 3 indicator hit. Right at the 786. Okay, now I'm looking at the total 3 in the same way I'm looking at Bitcoin. You have 3 degrees of AB basing. It is still a channel, but it's a downward sloping channel. In that regard, there is no need for a spring because the whole channel is sprung. The whole channel is going below where you thought it was going to go. Okay, so I think Ralph Nelson Elliott's 2 degrees of AB basing and a pivot helps here. 1 degree, I count. 2 degrees, I count. I think this is the 3rd degree. Coming up to the top here, which is the midline, it finds resistance. It comes down, probably makes a lower low, probably makes an equal or lower low, and then springs. This is what I'm seeing in altcoins. And I've tracked this in my personal watch list. Okay? So let's do that before we close the video. Again, this is all the same thing. I'm talking about a channel. In every case, I'm talking about a channel, I'm talking about an accumulation channel, and I'm talking about the matriculation of the price, making a high, testing the top of the channel, and then coming down and making a lower low in every single case, pretty much, okay? If I go down my watch list, I've done this meticulously. I'm going to go on the 4-hourly time frame. That's where I'm looking at this happen, okay? This is where I'm seeing the prices go for Blur, okay? I'm counting this as my 1st degree of AB basing, my 2nd degree of AB basing. I think the 3rd degree is going to be put in here. I think we're going to make a lower low. That lower low is going to stop a lot of people out. Remember, before really big moves, you tend to make a lower low. You tend to do something most people don't expect. That's how the price gets so much liquidity to fly. Don't be the people who don't know that fact. It's almost unheard of making a big sustained move to the upside without first bear trapping, without first making a lower low, without first going below what people thought they were going to go to. You'll see when prices start to go up, people are going to get excited, right? And they're going to forget about what typically happens before a bullish move. Same thing in Polkadot here. I have my 1st degree of AB basing. I see this as my 2nd degree. I think the 3rd degree makes a lower low. Wait for the lower low and measure the lower low by what this move does. On and on. You can count it for yourselves. Study your Wyckoff analysis, your Wyckoff accumulation. Study your I don't know, there's not that many places you can learn AB basing. I had to kind of teach it to myself through, going back through Ralph Nelson Elliott's writings, and then, back testing and trying to figure out what he was trying to say, because it's kind of like his secret. He mentioned it, but he didn't elaborate on it. So, I don't know many other people other than myself who talk about it, who elaborate on it, but here's what I'm seeing here. First degree, second degree, here's my third degree. I'm expecting a lower low in DYDX, okay? On and on. Here, hook, I'm expecting this. 1, 2, 3, I'm expecting this. Much lower low. And in that lower low, expect bullish divergences. You can see on your momentum indicators, you should be able to see bullish divergences. You will likely see that. KDA, I'm expecting that as well, right? On and on. Litentry, Ren, Sand, right? This is a very clean and clear, legit channel. I have my first degree of AB basing. My second degree, my third degree might come up all the way here, actually, and then back down. Okay? So these are accumulation channels that everything's going through. And don't be surprised if you come all the way up here before going all the way down there. That's volatility. That's what you typically expect before massive moves. Guys, that's all I have. I hope this was helpful. I hope this was useful. If it was, show me some love at the pinned comment below. That's the link to my Buy Me a Coffee. You can buy coffees. You can pay for, I think it's a $10 subscription for me to analyze an altcoin for you. I'll send it to you within the day, if not at the latest, within 48 hours. But show me some love there. Like, share, and subscribe. And that's all. Great luck in this coming move. Hopefully you manage and you make a lot of gains. Take care. Bye.